Howdy y'all, and welcome back to the Tech Scene channel. This is episode 11, Let's Ban Congressional Stock Ownership. About a year ago, last April of 2020, CNN conducted an interview with Speaker of the House Nancy Pelosi. Now, I talked in episode 0 about how I think the media and our political class have basically merged into one. And that interview was about as good of an example of it as I've ever seen. You don't expect CNN to ask difficult questions of Democrats. You don't expect Fox News to ask difficult questions of Republicans. Both of those networks are 100% in the bag for those political parties and their leadership. And this was a prime example. Speaker Pelosi decided to give that interview from her kitchen. And she was standing there in front of 2 refrigerators, each of which costing $20,000. $40,000 worth of refrigerators in her kitchen. And at some point, during that interview, she opened up the freezer portion and took out a pint of ice cream. And that pint of ice cream cost $12. Now, I don't know about you, but I don't have $40,000 worth of refrigerators in my house. And as for ice cream, I'm a Texan. I go Bluebell every time and twice on Sunday. And that certainly doesn't cost $12 a pint. It was a completely tone-deaf interview, and it probably hurt them in that November election, at least in the House voting. It was totally tone-deaf, and of course CNN, being the sycophants that they are, didn't bother to even call it out, and in fact didn't have any sense of self-awareness about it, of how bad it looked. And I think the reason Nancy Pelosi didn't think it looked bad either is because she's used to it. She's surrounded by people that have $40,000 worth of refrigerators, that buy $12 a pint, for ice cream. She's surrounded by these people. She's surrounded by her political class and has been for 50 years now, or however long she's been in Congress. They think it's normal. And it's normal because they're all getting rich off of their public service, quote unquote. And both sides of the aisle are doing it, and it's not anything new. Denny Hastert's probably my favorite example of this. Denny Hastert was a congressman from Illinois back in the 90s and mid-2000s. Before he went into Congress, he was a wrestling coach at a high school, where he actually molested some kids and tried to pay hush money later on in life. He went to Congress. He had a net worth of $250,000 when he got there. Then when he resigned, he had $17 million in net worth. I didn't see any place where he wrote a book. He wasn't an especially dynamic politician that could have given speeches for a bunch of money. How did he get rich? How did he take his net worth from $250,000, most of which was his house, to $17 million in the 15 or so years that he was in Congress? Might have been a little bit more than that, I'm not sure. Nonetheless, that's a hell of a financial performance at a time when he's supposed to be serving his constituents. And again, it's not anything new. Texans, we know about LBJ. LBJ had a long history of corruption. And he used his political influence at the FCC, the Federal Communications Commission, to get licenses for radio and TV stations that he had invested in and prevent other TV stations, competitors to his radio and TV stations, to get those same licenses. He used his influence to block competition to his investments. And, he took a $17,000 investment and made it into a multi-million-dollar company back in the 60s or 70s. So it's not anything new, and we all know what happens. Both sides of the aisle do it. We see our supposedly political servants who are there for decades leave very, very wealthy people. That's how we get a political class. That's how we get the feudal lords that are emerging, this oligarchy that's emerging in our society that we all see. We're supposed to vote them out, but we never do, and that's shame on us for that. That's going to be a subject of another video at some point. But the fact is, they're working for themselves. They're not working for us. There's only so much we can do about it if we're not going to vote them out. But there is one thing that we can do, and that's the subject of this video. So when talking about congressional stock ownership, what's the main problem? Well, the main problem that I see is that they can insider trade. Now, most people know what insider trading is, but just in case you're not familiar, this is the best definition I could find. It's the practice of purchasing or selling a publicly traded company's securities while in possession, maybe say knowledge, while in knowledge of material information that is not yet public information, obtained as part of a relationship of trust or confidence. So this is basically someone who is buying or selling company shares with information that the other traders that the general public don't have. And normally they got that because they have some sort of relationship, whether it's they're inside the company and, they're in a senior level and so they have the trust to know this information, or maybe they're a friend or a confidant or someone like that comes across the information. But they're profiting off of an unfair advantage is really what it comes down to. So, let's think about it. Who is an insider? Well, it can vary, but like I said, it could be someone that's inside a company, someone that knows someone that's giving them exclusive access. And as for material information, well, it could be anything that could result in a substantial impact on the decision of an investor. So could be a merger or an acquisition, could be a huge write-off, some sort of goodwill write-off, something like that. Anything that's really going to impact the health of the company or the long-term future of the company, that's material information. It has to have that kind of direct impact. If you know that they, switched out the coffee machines in the building, that's not really material information. Though it could make the employees more productive, so perhaps it is. But so, and non-public, what exactly does that mean? Well, again, it just means that it's not in the public domain. It's not something that people out on the street, if you stop them walking down outside in front of the building, would know. And, we see this quite a bit in the private sector with people who are inside the company, know someone inside the company, getting that information that way. And typically they're getting it in a way that is not leakable. It's not coming to them in an email that can be forwarded. It's usually done by word of mouth. So as a result of that, this material information from the insider who either possesses it or shares it is non-public. So that's all that means, okay? And insider trading is definitely not the only problem, as we'll discuss, but I think it's the biggest problem because Congress is constantly dealing with this type of information and has a huge amount of power over what happens in the economy at large. So as it pertains to Congress, let's think about what these definitions might mean. So an insider could be the representative themselves, it could be a close family member, someone that they know, or it could be a member of the staff or another employee of Congress, someone that's working on their team. If I have a staff of interns and I come to them and say, hey, we got this defense contract that we're going to vote on, kind of looks like the DOD is going to award it to this company over here. And, we want to come up with a press release and I need you to work on, what we're going to say about it. Should we be questioned about it if we're asked about it? That information is going to be in the possession of the members of the staff too. So everybody that's working on this at Congress might have access to that information, might be an insider, as it were, and could share it with their family or share it with other staff members of other congressmen. I mean, these people all know each other. They all, get together and party together. It's one big happy family up there on Capitol Hill, and it's a closed family, believe me. But nonetheless, those are the insiders, right? So material information, what could that be? Well, obviously pending legislation that is either in their committee or is likely to pass. They're going to have some knowledge of it. They're going to have some knowledge of what's in it. They're going to have some knowledge of its likelihood to pass or be voted down, and all of those things could impact a company out in the public trading. And they have access, and they're the only ones that really have access to it. It could be a pending ruling from the bureaucracy, like an EPA ruling. If the EPA came out and said, well, we're going to make it think cafe standards, for example. If they came out and said, we're gonna force the auto manufacturers to come up with a certain miles per gallon average for their entire fleet of vehicles, well, that's obviously going to have an impact on them, on the car manufacturers. So that's something that they could know. And of course, a defense contract to be awarded, that's a pretty easy one and a pretty common one, especially if you're on the defense committee. So lawmakers, they can act on this knowledge before the general public gets it. They can rearrange their own portfolios. They can notify their family members, so those family members can take advantage. Well-connected lobbyists, sort of the you scratch my back, I scratch yours type of deal. They can let them know too, and those lobbyists can act on that information for their own private portfolios. And of course, they can notify colleagues in foreign governments. And of course, again, it's a big happy family on Capitol Hill. It's a big happy family at the Davos conference too. All these people know each other. All these people talk to one another. They invest heavily in each other's countries. Don't think that foreign leaders aren't also taking advantage of the contacts that they have in our government. They're globalists, after all of them, or at least internationalists. That's the term I prefer. So the rules around this have been pretty lax historically, and that should come as no surprise. Congress kind of makes the law, and naturally they don't want to make a law that's going to harm their financial futures. Further to that, it wasn't necessarily easy to trade up until recently in any great amount, because you had to have a broker, and that broker had to be on Wall Street, and in the past it was a lot harder. A lot of companies weren't publicly traded either up until the creation of corporations and things like that. So it was something that the House and the Senate really never addressed, and they were kind of left to police themselves. Now, violations did occur, and Congress would handle them, to be fair, but they had to be pretty egregious, And the best example of this was the Abscam probe when the 96th and 97th Congress, which was kind of around the 1970s. And in that, or as a result of that, I won't go into what the Abscam scandal was. If you want to learn more about that, you certainly can. But this is probably the best example that I could find. And Senator Harrison Williams of New Jersey had to resign in disgrace because of what he did. And it wasn't anything that was, from the law enforcement. It wasn't from the DOJ. It wasn't even from the SEC. It was the Senate investigating this matter and sanctioning or, basically kicking out one of their own members. So the fox is well and truly guarding the hen house. You didn't have a lot of outside influence on this, and there weren't a lot of rules that they had to live by. And as I said at the beginning, typically in the past, elections were seen as the main accountability, right? If your congressman or your senator misbehaved, well, the thinking was you'd vote them out. But as we've seen, these people have well and truly entrenched themselves, and they're making it even harder now to get them out. So it's becoming an even bigger problem. And, again, we have to be better about voting these people out. I support term limits. I'll probably do a video on term limits later on. But we have term limits right now. They're called elections. And we should be voting these people out. But we don't. And so that level of accountability, that sort of check on their behavior also doesn't really exist. And the ethics manuals in the House and Senate didn't, and don't expressly ban it either. Now, this is a direct quote from the most recent version of the Senate Ethics Manual that I could find. And it basically says, we're going to presume that the member was working in the best interest of the public and not in their own interests, right? We're going to default to that. It's kind of the innocent until proven guilty idea. We're going to assume we're acting in good faith until, you can kind of show us otherwise. Now, that to me, again, is giving an awful lot of leeway to our Congress. But, again, the idea was we would vote them out if they did something bad. However, we're not. So, not surprisingly out of all this, our representatives, in quotes, because, again, they're not representing us anymore. They represent themselves and the banking and corporate elites that have them captured. But they got wealthy, and they've dodged a lot of bullets in the past that average people like you and I have had to take in the chest, metaphorically speaking. There's some really great studies on this, and I want to kind of run through them really quickly. So, from 1993 to 1998, U.S. senators beat the market, both buying and selling. Now, I'll put the source here in a second, but what they basically did is they took all of the transactions that they could find from the U.S. senators from 1993 to 1998, and they set up a dummy account, sort of like a clone account of these senators, and they watched how that would actually perform. So no one really knows what, let's say, the senator from Texas from 93 to 98 made, right? It doesn't necessarily have to be disclosed. But they do know the trades. And so they said, okay, well, those do have to be disclosed. And so they went back and they said, all right, if we mimic his trading behavior from 93 to 98, how does it come out? And turns out that purchases of stock beat the market. So these senators, with the dummy accounts that were made to mimic their behavior, they beat the stock by 85 basis points. So per month. So that means that by about 0.8% every month, these U.S. senators were beating the market. That's pretty significant. It may not seem that way, but that's pretty significant. If you're an average day trader, if you're an average Joe, and you're beating the market by 85 basis points a month, you're going to be a very wealthy person, a very wealthy man or woman very soon. And, of course, our U.S. senators are very wealthy. Divestments or sales of stock also beat the market by 12 basis points. Lagged is kind of the reverse, right? So both buying and selling, they beat the markets. And they beat it by about 1% per month. Which is again, a significant amount of money when you think about it over the course of 5 years, 5 or 6 years, whatever, the time frame was. And I like this quote, we find the behavior of common stocks purchased and sold by senators indicates the senators trade with a substantial informational advantage. That's a direct quote from the study. And I think that sums it up. That's not me saying that. That's these researchers saying that. The behavior of common stocks purchased and sold indicates they have a substantial informational advantage. That's how they did it. Because if they had the same information that you and I had, they would, at very best, match the market and probably get beat by it, like most of us do, or at least some of us do. But instead, they beat it by 1% a month. Now, are our senators just that much smarter? You tell me. I'm not convinced. From 2004 to 2010, the median wealth increased also of our Senate and House members. This data comes from the Washington Post and from the census. So from 2004 to 2010, members of the Senate grew their median wealth. Basically, the median is the center of, half of the senators are more than this, half of the senators are less than this. That grew from 1.5 million to 2.6 million over those, call it 6 or 7 years. 73% growth. Now, a lot of that has to do with the fact that the Senate doesn't turn over as much as the House, right? They're there for 6 years, and I think we actually tend to reelect senators at a higher rate than we reelect our congressmen. So it's not surprising, right? They're there longer, they have all the contacts, they're able to leverage this in a little bit better than the House members can. But they also grew by 15%, from 650K to 746. And look at those numbers, the median wealth, 1.5 million for our senators. Now it's 2.6 and 746,000, and that's 10-year-old data. How much of the market's gone up since 2010? Of course, that was right after the meltdown. Who knows what it is now, but it was the most recent data I could find. If you have more recent data, please comment below. I'd love to know. At the same time, median household wealth for U.S. citizens declined. Again, it was right in the middle of the 2008-2009 hit. So while we're going down, while U.S. citizens, normal citizens, are seeing their median wealth decline, the Senate and the House are growing theirs. So are they just that much smarter than us? Are they just that much better than us? Is Ted Cruz, Bernie Sanders, these people, are they smarter than Warren Buffett? Bill Gates? Most of them are lawyers. A lot of them don't even understand basic economics if you hear them talk. So I'm not buying that they're just that much better. I'm buying the fact that they have insider information that allows them to outperform the market and make money when we can't. Political class protected their wealth in 2008. This is really the event that I think laid an awful lot of things bare in our society. We learned a lot about our banking industry. We learned a lot about Congress and our political class. We learned a lot about ourselves in 2008. Now, unfortunately, we didn't learn those lessons well, and we've doubled down on the errors, if you ask me. But in 2008, we saw the political corruption bubble to the surface. Excuse me, sorry about that. We saw the political correction bubble to the surface in ways that I don't think we even, or at least I'll speak for myself, that I didn't even think existed to this degree. But in the run-up to the 2008 meltdown, kind of in the spring to early summer of 2008, before things really went belly up in September and October, 34 members of Congress adjusted their portfolios after meeting with Hank Paulson, Tim Geithner, or Ben Bernanke. So these people have access to Paulson, Geithner, and Bernanke. And Paulson, Geithner, and Bernanke are sitting there and telling them, this is really bad. This is real bad, what's coming. So you better, make some changes. Did you meet with Hank Paulson or Tim Geithner? I didn't. Did you see Hank Paulson and Tim Geithner come on television in 2008 and tell us that we needed to adjust our portfolios because things were about to go real bad? Or Ben Bernanke? I didn't. I don't remember that. But our Congress did. Our Congress sure did. At least 34 members of them. I love this quote. This is great. The lawmakers, these 34 people, these lawmakers, many of whom held leadership positions and committee chairmanships in the House and Senate, changed portions of their portfolios a total of 166 times within 2 days of speaking or meeting with the administration officials. 166 changes within 2 business days of meeting with these people. They knew. They had a heads up of what was coming because they had that insider information. They had people like Hank Paulson and Tim Geithner telling them the truth. At the same time, they weren't telling us anything. And they were able to move around their positions. They were able to move around their portfolios and not take the hit that we all took in 2008. And then, of course, they went and passed TARP and used that to enrich themselves and their friends, too. There's some studies done on this. I'll put the source up here in a second. They took a look at TARP and how, people performed. It's a troubled asset relief program, if you don't remember. This was basically the bailout or the stimulus plan that was passed by George Bush in 2008, right in the teeth of the crisis. Political class, they knew what was in it. They knew how to leverage it. They'd written it. And passed it. And well-connected insiders beat the market by 4.7%. They've studied this and found that the people who knew about TARP and knew the people in Congress themselves and the people that were closely connected and well-connected to them beat the market by 4.7% as the TARP money began to be distributed out into the economy. Here's another great quote. Consistent with the increase in the informativeness of insider trades relating to private information gleaned from political connections, we find that the increase is concentrated entirely among the trades of politically connected insiders. That's from the Harvard Law School Forum on Corporate Governance. No right-wing think tank. No conspiracy theory. Those are solid academics who took a look at it and found out that as the money from TARP was being distributed and pumped out into the economy, people that had political connections beat the market. And they were the only ones that beat the market. They were the only ones that had, the increase. And it was 4.7%, which again is not some small amount of money. So this caused a lot of outrage, and rightly so. Unfortunately, once again, we reelected all these people, or at least most of them. But it did lead to some very good things. Now, the Stock Act of 2013 is one that I actually think is a pretty good piece of legislation. I'm probably going to do a video someday on my, top 5 or top 10 pieces of legislation that Congress has passed related to finance and financial regulation. SEC Act of 1934, Banking Act of 1933, those are the big ones. Those are the two sort of gold standard in my opinion. Gold standard, we should talk about that too. But, again, another video. But the Stock Act of 2013 actually is a pretty good piece of legislation. And I applaud Barack Obama and the Congress, which was Republican at the time, that was the Tea Party wave. I applaud them for working together to try to address it. So what exactly did the Stock Act of 2013 do? Well, it amended the Ethics in Government Act of 1978. And it basically changed the way Congress and people who were elected representatives could interact with the financial markets. I can't remember what STOC stands for. I think it's something like Stop something of Congress. I can't remember. Anyway, you can look it up if you're interested. The acronym does mean something, but it really had its main effect was on how Congress would interact with buying and selling securities out on the open market. So it amended the Ethics in Government Act of 1978 and it made it clear that members of Congress were not exempt from insider trading prohibitions. Again, there wasn't any rule on it in the past. It wasn't something that was really addressed. Congress was supposed to address it, and we were supposed to vote out anybody that behaved that way. They really weren't addressing it, and we weren't voting them out. And so they tried to address it. Congress did try to address it with this bill. I think a lot of it had to do with the outrage that many people felt and the Tea Party wave that had come in 2010, sort of riding a tide of populism gets a bad name, but it was that sense of outrage over what had happened in 2008 and in 2010 that was really behind it, in my opinion. And so, as a result of that, they were trying to address that problem. And it also amended the SEC Act of 1934, again, one of my favorites, that the members of Congress, they owed a duty. They had a fiduciary duty, a duty of responsibility to the public with non-public information. So basically said, look, we realize we're not going to be able to keep non-public information away, right? You're the equivalent of the CEO at the company. You're going to have access to information that nobody else has, but you have a duty of responsibility with it. You cannot use it to profit. You cannot tell insiders so they can profit. You have a responsibility as a elected, quote, representative, end quote, as a, quote, public servant. Unbelievable. Anyway, they had a duty of responsibility with this information. So it made it clear. And it amended the Commodity Exchange Act to apply to members of Congress as well. That was kind of a, if you wanted to buy like an oil future or, currencies or gold and silver, precious metals and things like that, all of that's done on the Commodities Exchange, which is a little bit different than the stock exchange. And it just made clear that Congress couldn't go over there and misbehave either. So the last thing, or not the last thing, but one of the things that I kind of think the law fell short on, perhaps intentionally, but certainly ended up falling short on, was the disclosures. Now, the original bill said they had to disclose their transactions to a publicly searchable database so that regular Joes like you and I could log in and see what our members of Congress were doing, what they were buying and selling, and whether or not they were behaving in an illegal at this point way, but certainly in an unethical way, if they were using information to profit in a way that others couldn't. It was supposed to have some sunlight on it that we could go in and search. Now, that was later repealed. It was one of the things that they took the teeth out of the law with, that I disagree with quite a bit. But the original law did say this had to happen, and I think that was a good thing. However, it's no longer the case, and that's a real shame. And they took it away because they basically said it was an invasion of privacy, that you could get private information these members of Congress had to put out there. I'm a little bit, if you're a public figure and you're going to be a member of Congress, I think you lose a little bit of your privacy. If you're going to be a public representative like that, some of your privacy has to go away. And that's just the way it is, in my opinion. But nonetheless, Congress made the change and took that requirement out, and that took a lot of the teeth out of the law. Also, family members aren't addressed. It's not mentioned at all about family members. So their spouses, their kids, cousins, aunts and uncles, whoever, weren't covered under the Stock Act. And they could basically use their family to do an end run around it. So it was a good effort. It certainly wasn't a bad piece of legislation. It just kind of fell short. And I think in issues like this, similar to the Banking Act of 1933, the effort by Congress should be to overshoot the mark, to do too much instead of not enough. And unfortunately here, they really didn't do much, and then they took the main teeth out of it, or at least the main accountability out of it. So why is it a problem, to let Congress trade and own securities if the Stock Act exists? We do have this in place to where, it's basically made some changes to these other acts that kind of make it very difficult for Congress to insider trade. Well, it kind of goes beyond insider trading. Like I said on the first slide, it's more than that. It's definitely not a good thing to have them insider trading, but it's a bigger issue. And the first issue is the Stock Act is enforced by the DOJ and the SEC, who receive their funding from Congress. So are they really going to go after Congress if they know Congress holds their purse strings? It's a massive conflict of interest. And, we're supposed to have a DOJ and a Securities and Exchange Commission that is non-political, that goes after both sides, that doesn't worry about this type of thing, but they're investigating congressmen. And these are very powerful congressmen and senators who hold their purse strings and have the ability to, if you're a kind of a mid-level employee at the DOJ, can make your life really tough. They're very powerful people. And they're the ones that basically control the funding to the DOJ and the SEC. So it puts a little bit of a damper, I think, on a lot of the investigations. And again, Congress gutted the Stock Act to prevent that disclosure that might have revealed the malfeasance. It's no longer there. And so we don't really have a way to verify it. We don't really have a way to just kind of log in and check. And so we can't vote these people out. We don't have that level of visibility. So that's a problem too. The Stock Act doesn't really solve that. And the members might be getting information, not just from the normal course of their responsibility, but through corrupt channels, like the IRS. If the IRS is about to audit a company, for example, for tax, well, that's going to have a big impact on their stock price when it becomes public. If they find out about that ahead of time, they might be able to, change their portfolios, and that's not the normal course of their responsibility. It's through corrupt channels. It's through, members of the IRS over cocktails one night, telling them something that they shouldn't, and that's not really addressed by the Stock Act, unfortunately. Conflicts of interest, if they own stocks, they can steer legislation towards companies that they own and away from companies that they don't, just like LBJ did, in a way. And they can do something like pressure the DOD to award a contract, a defense contract, to a company that they're invested in or not invested in. We see a lot of this conflict of interest when it comes to green energy. If I'm invested in a green energy company and I need the EPA to make a ruling that allows it to, allows this company to get a permit or do something else that they might want to do, and I'm in a position to do that, then perhaps I will as a congressman. I have that conflict of interest, and the same thing is also true with oil and gas. If you need a permit to export liquid natural gas, for example, you're an LNG exporter. You got to have permits and all that kind of stuff. You got to have environmental permits. Well, if one company is better connected, if one company has political connections, they may get invested in or get the approval faster than another one, and the Congress will know that and will steer that approval to the company that they're invested in. So there's a conflict of interest here too. And let's be honest, and this is probably a little bit of pie in the sky, but Congress is meant to be a place of service, not a profiteering. You're not supposed to go there and make a career out of this. And you're certainly not supposed to go there and leave a wealthy person. But our Congress people do. And again, it's really shame on us because we should be voting these people out. So we still have all these other problems that the Stock Act really doesn't address, or make the Stock Act a little bit short of what we need to do. So what should we do about it? What should we do about Congress and their interactions with the market? Well, I support the Anti-Corruption and Public Integrity Act. I said at the very beginning, the title of this video is Let's End Their Ownership of Securities and Stock. I lose a lot of bona fides with my conservative friends when I talk about this because it's proposed by Senator Warren, and while I disagree with Senator Warren on many things politically, I find myself closely aligned to her when it comes to, or at least her viewpoints, when it comes to regulation of business, regulation of the banks, getting some of the money out of politics, getting our Congress people under control from the corruption. I find that she's very solid on this and someone that I support in these efforts. So I like this law because there's a couple of things it would do. It would, number one, ban them from owning or trading these stocks, bonds, and commodities and other securities and investments. So they basically can't own them. They can't trade them. It bans them, officers and employees of their committees from owning those securities that the committee's actions might affect. So especially, if you're the chairman of like the Defense Committee, for example, I can't remember the name of it now, but you couldn't own securities that the companies if the efforts of the committee might actually affect how that security goes, right, or how that company does. So that's a really good piece. And then of course ban members of Congress from trying to influence legislation that would benefit their financial interests. So we talked about those kind of conflicts of interest. This would address that, and it would ban them. Now, members would be forced to sell their holdings and put them into a fund managed by the Federal Thrift Investment Board. So what that means is when you came into Congress, you would have to liquidate your holdings or put them into and put that cash into basically a 401k for Congress, if you want to think about it that way. It's a managed fund that has been there forever, and they would manage the funds for Congress. So Congress wouldn't be able to buy and sell them. It would be this manager who would do that. Now, I would like to see that be blind. I would like to see more of a blind trust type situation here, but it's at least better than allowing them to have direct access to it. And of course, we're not necessarily taking them away from their money. They can withdraw funds at any time without penalty, and I think they should be able to add funds into that as well. What they shouldn't be able to do is trade the stocks themselves and trade the holdings themselves. The Federal Thrift Investment Board should be doing that. So I think it's a good law. I definitely think it's a good law. Now, it's not perfect, but it's the best solution that I've seen. There's a couple problems with it. Family members can still own stock, though members can't push for legislation to benefit them. So it doesn't really address the family member problem. And as a result of that, I think what we're going to see is our morally bankrupt political class finding a way around it, using their family members or using other means. However, it's better than nothing. I certainly think it's a good start. And just by taking the holdings away from Congress and putting them into this sort of managed fund and out of their ability to influence, I think it would be a good thing. It would do away with the issue of insider trading. It would do away with them benefiting from information that no one else had. It would do away with the conflict of interest. There's an awful lot of good that would come out of it. But we would still have some holes that we would have to plug. And, hopefully, again, through the elections process, we can hold some of these folks to account if we find out that they're doing things that are corrupt or unethical. So I support banning them owning it outright. I think that we should not allow them to own stocks, and I think that the legislation that Senator Warren proposed is the best that I've seen. I support it. I hope it becomes law. That's my view. I welcome your views. If you thought this video was good, give it a like. If you disagreed or you agreed, comment below. Let me know why. I'd love for you to share this video out to your friends and get more people talking about not only that piece of legislation, but the issues and problems with Congress owning stocks and owning securities and sharing them. And of course, subscribe to the channel if you'd like. We talk a lot about esoteric history along with structural economic and political problems that our country faces. And I welcome you to check out some of my other videos. And if you think they're good, please subscribe to the channel. As always, it's my pleasure to talk to you. Thank you so much for listening. Until next time, God bless.